I'm Charlotte McLeod with investingnews.com, and here today with me is Mark Skousen, Editor-in-Chief at Forecasts and Strategy and Professor at Chapman University. Thank you so much for joining me. Great to have you here.
It's been a pleasure. I just arrived here in New Orleans. I've been here, by the way, at virtually every conference since like 76, so right. I'm a pretty much a regular here at the New Orleans Gold Conference.
Yes, really good to be meeting you. It's our first time talking, and I'm sure our audience will be familiar with you, but for those who might not be, I wondered if you could give just a brief introduction to yourself and your work.
Yeah, so I'm an applied economist, financial economist. I have a PhD in economics and monetary economics at George Washington University. And unlike a lot of people, I've had a lot of real-world experience running businesses, making money, losing money, and I also write an investment newsletter since 1980. I've written about 25 books and have taught economics at Columbia University, as well as currently at Chapman University. So been to 77 countries, been married, and my wife and I are celebrating our 50th wedding anniversary this year. And I have 5 children, 8 grandchildren. So that's kind of a nice little summary of my life.
The Cliff Notes. Thank you for that.
You bet.
Okay, so as we've mentioned, we're here in New Orleans at the investment conference, and people come here, they want to know where the best places to put their money are. So I wanted to start there and ask you where you're seeing the most opportunities at the moment.
Well, I do think that that there's something. You said they come here to find out what their best way to make money is, and I think there's a very strong ideology here of gold being representing sound money, and I've been a part of that in the 1970s. That was the inflationary 70s. And we went off the gold standard, and gold went up to $800 an ounce. So my very first investment was actually a silver dollar rather than stocks and bonds. But when Ronald Reagan was reelected, or was elected president in 1980, that was a sea change where there was an effort to fight inflation. And so stocks and bonds became a more popular vehicle, and gold has struggled ever since then. And so it's more cyclical. So as far as where to invest your money, I've always believed that most of your money should be in the traditional stock and bond markets, as long as we maintain basically a free enterprise system. And I think the United States suffers from a lot of problems that have kept the stock market from rising, particularly in recent times. But gold and silver do play a role in your portfolio. I believe in a well-diversified portfolio. If you looked at my newsletter, Forecasts and Strategies, I have stocks, I have income investments, dividend-paying stocks, I have gold and silver. Uranium, I'm recommending that now because that's in a bull market. But commodities are cyclical, and stocks and bonds are cyclical as well. So you have to choose the right time to buy.
Yeah. Before you were kind of explaining this to me before we got started, and how maybe unlike a lot of people here, you don't see gold as such a major part of the portfolio. So I was asking, what reaction do you get to that when you come to a place like this? And, how much of the portfolio should be in gold? Can we go into that a little bit more?
Yeah, and the best way to tell that is a story. Like 5 years ago, I came to this conference when the stock market was in the mother of all bull markets and hitting new highs. And I was extolling the virtues of the stock market. And afterwards, 3 or 4 investors came up to me and said, well, we've lost 70% of our money. And I said, how's that possible with the market at all-time high? And he said, well, we bought all those penny stocks, and gold did not do particularly well. And so the penny stocks fell out of fashion. And so I warned people, you put too much in that. You might want to speculate with 5% of your portfolio in some penny stocks, but you don't want, you want to stay with businesses that work. And mining is a very tough business. It's a low margin business. They don't make a lot of money. A lot of gold and silver mines lose money every year. So the only way they benefit is from higher gold and silver prices. There's a lot of hope at these conferences. So I give a warning signal to people, and I'll be doing that here in my major speech here. So it's called the courage to be disliked. And I'm recommending my own strategy of diversified portfolio and not going overboard with gold and silver. It plays a role, and we may be entering a period where gold will do better and silver would do better. I'm very big on uranium right now because that's an alternative energy source. And I don't know if you wanted to talk about uranium.
Oh, I would love to. Yes, yes. Maybe I'll ask you a follow-up on gold. And one of the things, based on what you're saying, so a lot of people here are looking at what's going on in the markets and they're wondering, why is the gold price not higher? So for you, do you think we're at an appropriate level at the moment?
Well, gold has hit $200 an ounce like 6 times and then retreated. And it did it again. It hit $2,000 an ounce and then it backed off again. Now, it may, at some point, I think it's going to crash through and go to new high levels. But one of the reasons is the Federal Reserve is aggressively raising rates. They're raising rates faster than they have in 20 years. So when you do that, gold doesn't pay any interest. So you're up against interest-bearing investments, dividend-paying stocks that are doing much better in terms of a yield. Gold doesn't pay a yield. So gold does much better in a low interest rate environment. We don't have that right now. We have a high interest rate. So the only way I think gold will break through and stay above 2,000 if the dollar becomes weak. And the dollar's not going to become weak until interest rates start coming back down. And that will cause the dollar to drop because gold is quoted in dollars. And if the dollar's strong, gold is going to be weak or it's going to be lackluster. So I look at the dollar as a critical element here.
Right. And I imagine when you're talking about interest rates going back down, I think people are looking to next year and saying, okay, probably that's when the Fed starts to make its retreat. But I imagine you'd be looking for more than like a quarter point decrease to give a boost to the gold price.
And I don't think that's going to happen unless there's an actual financial or monetary crisis. And that could happen because the dollar is so strong and most of these emerging market debt, for example, is all in U.S. dollars, and they're paying these very high interest rates, and they're not going to be able to pay that off. So I think there's going to be emerging market debt crisis. When that happens, the Fed is going to cut interest rates probably pretty sharply because the fear of contagion that this will spread and create a financial crisis. And the U.S. is in no position to have a major recession, because if we do, that means the deficit is going to balloon even more. The national debt's going to get out of hand. So the Fed doesn't want that, but they may get it nevertheless.
Okay, so interesting. So you see possibly this emerging market crisis and then it spreads over into the U.S. And the reason I ask is because we hear...
May even be, by the way, we've already had a banking crisis once in 2022. And that could happen in the U.S. as well, because, again, what is it that most banks hold? They have huge positions in U.S. bonds, long-term bonds. Well, those prices, the price of bonds have dropped sharply, down 30% in the last year or two, and that has devastated the portfolio. And a lot of people, a lot of wealthy bank people who have money in banks are withdrawing their money, and that's what caused the crisis in 2022, and it could happen again in 2023 or 24.
Okay. And so I think people look at these circumstances, and maybe people at this conference think, okay, well, I don't really want to be in the stock market in that case, because that sounds like something bad could happen. But for you, if you're looking at that more diversified approach that includes the stocks, how does that work for you?
Well, I'm more conservative there, so I would recommend gold itself. And I do, in my newsletter, Forecasts and Strategies, I do have a gold position. GLD is the, I think it's the Spider Gold Shares. GLD is the symbol. And I'm recommending that because if you have a stock market crash, everything drops, including gold stocks. So, but gold itself would go up, and that has been the tradition in a crisis. So, to me, gold is your best position to protect yourself from a stock market crash, or at least a major bear market. I'm not calling for a crash per se, because in the U.S. we have circuit breakers that keep a crash from happening dramatically, and we have the plunge protection team, which is the Treasury, the SEC, government officials who are prepared at any time to inject liquidity and to buy quantitative easing and all that sort of thing to turn things around.
So even in a crisis scenario, you don't see that going too far because they will step in.
I see a mini crash, but not a major crash because of all of these factors that are keeping it from happening.
Right. And so you would have just to talk a little bit more about portfolio allocation, you'd have your gold for protection. And then how's the rest looking?
Well, I like dividend paying stocks, rising dividends, high dividends that have stood the test of time. You don't want to get overboard with excessively high interest rates. You want to make sure that the earnings can cover the dividend. But there are several oil and gas companies that are really good, private equity investments. I recommended a number of those where they have a long-term rising dividend policy, and that cushions the fall. Yes, the stocks are going to drop, but it cushions the fall, and sometimes even raise interest rates. I remember one of my pipeline companies actually raised their dividend during the 2008-2009 crisis. So even though the stock was down 40%, I said, wow, they're raising their dividend. That's a positive sign. Keep buying, and then they fully recovered.
Okay, and since you mentioned oil and gas, maybe we look over to uranium because that's on the energy side as well. I know a lot of our audience is interested in that sector. They're excited to see the price moving, but wondering, what's the trajectory forward? So what are your thoughts there?
Well, there's no question that probably uranium is one of the fastest bull markets right now. It was at $50 a pound. Uranium was at $50 a pound a year ago. Now it's at $74 a pound. That's a pretty substantial move. And the uranium stocks and the uranium ETFs are moving along with it. So I have a position in Forecasts and Strategies in uranium, and I chose a company that's actually making money in uranium because a lot of companies are losing money even at these higher prices. So I wanted a company. It's only selling for 13, 14 times earnings, so it's doing really well, and we've already made a good 20, 30%, but I think it has upward momentum because nuclear power is coming back. Finally, the environmentalists recognize that it's a safe, secure way, and it's much more productive than even fossil fuels, and certainly much more productive than solar and these other methods of wind and so forth that really have to be subsidized. Uranium doesn't really need to be subsidized, although it is government controlled a lot more than other commodities.
Okay, so we've covered kind of some of the elements that investors should pay attention to in the market right now. One that is a little bit more forward-looking, we have 2024 is going to be an election year in the U.S., and I wondered if we could talk a little bit about that and what that could mean for investors.
So the Fed policy is so aggressive, and they've raised interest rates so high, so fast, and the money supply is not growing much at all. You definitely have a tight money policy right now, which does possibly mean a recession in 2024. And that's good for the Republicans. The Republicans should be able to take advantage of it. Now, of course, Donald Trump is a wild card there because I think he's blundered repeatedly, and that would be a dangerous situation. But you'd think the House and the Senate would move to the Republican side at least. And so that's positive for oil and gas, for tax relief, and so forth. The Republicans have not been very good on deficit relief. However, I have to criticize the Republicans for not, they love the tax cuts, but as far as actual government spending, reducing it, they have a checkered past in that regard. But I think it is positive for Republicans, which tends to be pro-free enterprise and market solutions to global warming and our environmental problems. So I think, generally speaking, that's good for investing.
Yeah, and you mentioned a recession. I think people have a lot of questions about that as well, including, well, we want to see if it's going to happen, and then how deep, how long. Do you have any thoughts on that?
So it totally depends on the Federal Reserve, but I must admit that 2023 has been much more resilient to a recession. We haven't had a recession so far, so maybe that's because the lockdown, after the lockdown, the economy came back and is just trying to catch up with the supply chain limitations and scarcities and shortages and that sort of thing, and the market's responding to that. So that could be an element that is going on there. And certainly fiscal policy, the government under the Biden administration has been very stimulative, very aggressive in running deficits and stimulating the economy. The economy may be growing on that, but you can't do that forever. We're headed for a fiscal debt crisis at some point. And interest rate, the cost of financing the deficit is rising dramatically with these interest rate hikes. So it's a very dangerous game that is going on right now. So that actually bodes well for gold as an investment.
It does, yeah. I guess people, I don't know if they'll be happy to hear that. It's not really good news, but nevertheless.
At least it's a way to protect yourself in case that does happen.
Yeah, so I think we've gone over a lot of points. Anything else that you think investors should be paying attention? I know there's lots of things, but key things that we haven't talked about that you're watching.
Yeah, so I am concerned about global instability. We now have 2 major wars going on. We could have a third with China and Taiwan. There's really the spreading of world war could be a serious destabilizing factor in the economy. Again, very positive for gold and defense stocks and things like that. There are always ways to protect yourself in these kinds of environment, but we need to be alert to that. My experience is, my attitude, my motto is know the signs of the times when it comes to what's going on. And that's why people subscribe to my monthly newsletter with a hotline every Monday, just to try to keep up on everything that's going on in the world. And that's another hot spot, another danger that we need to be alert to.
Okay, I'm going to finish with what I've been calling it a fun question. We'll see if it's fun. For investors, what are some do's and don'ts as we head into the end of 2023 and into 2024?
So I've written a book called The Maxims of Wall Street, and it's available in bookstores as well as my skousenbooks.com if people want to buy it at a discount. So that's in its 10th edition, and there's some great quotes in there about the marketplace. Bears make headlines, bulls make money. That's often a good one to remember. But also, there's quite a few really great quotes from people who realize you have to be aware of the doomsday scenario, because bull markets climb a wall of worry. And most of the time there's some negative news out there that could keep you from being investing. But Adam Smith, the founder of free market economics, it's his 300th birthday. I've given a number of lectures on Adam Smith, and he was always an optimist. He said, despite the greatest errors of administration, everybody tries to do their best to improve their own condition. So I actually think that we need to be optimistic and be realistic, but also optimistic, and not get too carried away with the doomsday scenarios, which is very easy to do at this conference.
It is, yes. I have left in some years and been like, oh my goodness, the world is going to end.
The world's coming to a hell in a handbasket.
Yeah.
The apocalypse has arrived, and yet it's constantly being postponed, isn't it?
Yes, we're not there yet.
Yeah.
So that's great advice. And my coworker, I believe, got a copy of your book, the one you were talking about from
the
you last year.
Maxims?
Yeah, we were looking through it. So that was very good.
Yeah, it's about 800 quotes, some short stories and so forth. And yeah, it's done really well. It's sold over 50,000 copies.
Wow.
Yeah.
Okay. Yeah. Okay, well, we'll wrap it up there. I'll let you go. Thank you so much for making it here to speak with me. I think you came straight from the airport, so I really appreciate it.
Yeah, now I'm going in to give a panel and then my keynote speech.
Perfect. Okay, well, I hope they both go well. Thank you so much.
All right, Charlotte, thank you.
Okay, and once again, I'm Charlotte McLeod with investingnews.com, and this is Skousen. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.